What's good, everybody? So I'm going to be talking about counter trend trading, how to catch it. So starting off, I'm a break and retest trader, meaning I wait for the break, I wait for the retest, and I get in with the continuation, right? This is known as what? The flow of the market, riding the wave, right? And if we just draw this out, you can see how this is riding a wave. My price is moving in this uptrend direction. We're forming new higher highs, we're forming new higher lows. Price broke past a recent structure area. It came back down, retested this recent known resistance, now treating it as support. We got in and we continue to route this trade towards the upside. But what a counter trend trade will be is, instead of us waiting for the pullback towards this recent broken structure, we look to catch a trade back down towards this direction. There's two possible ways you can catch a counter trend setup. This is setup number one, looking to get back in on the retracement back down towards this area of interest before price then has that continuation back towards the upside. So you're just looking to ride the retracement, aka the counter trend trade. We know the overall direction is up. We're looking to get in as we're coming back down to form the retracement. The second option is the retracement, but it's a breakthrough retracement. What do I mean by that? Well, price had the retracement, but price then had the break past the recent area of interest, coming back up to now retest that area of interest, and then having that possible continuation back down towards the downside. Again, this is a counter trend trade because what are we looking to do? We're looking to get in on this move towards the downside, even though price is still maintaining in this uptrend structure due to us not having any type of break of structure of this recent higher low. So you have two counter trade setups. You have your first one, look to get in on the retest. You have your second one. As price had the retest, it broke past this recent area of interest. It got back underneath where it was treating it as resistance once, now possibly treating it as resistance again, and you're looking to get in around here. Both of these trades are clear as day in an upwards trend. Nothing has broke structure towards the downside, and you're looking to take the counter trend. Correct setup, counter trend setup. So I'm going to show you this. Well, I'm going to show you both examples. The first example is going to be the retracement. Simple as day, nothing hard. We're going to get through that one, and then we're going to go and jump into the breakthrough with the retest. All right, starting off on CHF JPY, I'm going to go into replay mode around here. So we always start off on the daily time frame so we can identify our trend. In this case, since we are looking to take the counter trend setup, whatever the daily time frame is telling me, I'm looking to trade the opposite. What do I mean by that? Well, let's draw out structure. We obviously can see that we are in this downwards trend. Price then had the switch of structure happen around here due to the breakout of these recent lower highs, excuse me. So as soon as price gave us that break of structure, we are now just looking for price to have the retracement back down towards that recent area of interest being around here. If we grab our box, we can pull this zone out, and you can obviously see how we have structure set up. If we draw this, we'll drag this out over here. You can see how price was in this downwards trend. Price had to switch towards this bullish structure, breaking past this recent higher high. We are simply waiting for price to form the retracement back down towards this recent zone. Where price was once treating it as resistance, we want to see it get treated as support. Since we're waiting for price to come back down towards this area of interest, when price was first having that initial move towards the upside, I saw how price started to slow down when we reached this area of resistance. If I drag this area out and I get my box tool, you can see how this is a well-respected zone. Price taps back into this area when we are below, treats it as resistance, and falls towards the downside. It happened once, twice, 3 times, 4 times, 5 times. We're treating it as support. If I zoom out and look towards the left, previous data, that's pretty far, but we have multiple signs of rejection towards this area of interest where price, like we just talked about, it taps and reacts pretty fast back down towards the downside when we are below. So what happened? Price reached this area once more, it found that rejection, and now we can see a price having that slow move back towards the downside. And every time we tap back into this zone, what happens? We tap, we form the bearish engulfing, and we continue to fall. We tap, form the bearish engulfing, and continue to fall. We tap, form bearish engulfing, and continue to fall. And what happened here? We tapped, we formed this bearish engulfing. Now I'm looking for price to continue to fall. This is when I dropped down towards the 4-hour time frame. My job was to identify the structure. Which trend are we in? I'm looking for the counter trend move. Therefore, I'm looking for the 4-hour to be in a bearish trend. One, allowing this daily time frame to form the retracement back down towards this recent broken structure, and then two, allowing the 4-hour time frame to go from bullish to then bearish to allow that retracement to happen. Right? If you don't know already, if we're on the daily time frame and we're looking for price to form this retracement back down like so, you have to remember every time frame is different, right? Every time frame is going to have different structure. Every time frame is going to have different patterns. So as we're waiting on this on the daily time frame, the 4-hour may look something like this, where price is moving towards the upside, and as price is moving towards the upside, now when we're looking for price to form this retracement on the daily time frame, the 4-hour has to go from this bullish trend to now a bearish trend to allow the higher time frame, aka the daily time frame, to form the retracement back down towards this area of interest. And then once price has that retest of this area of interest, we wait for the shifter structure, the retest, and then the continuation back towards the upside. But before that all happens, we simply have to allow the 4-hour to go from bullish to bearish to allow the daily time frame to have the retest before we have the continuation back towards the upside. So going back towards the chart, looking at it from a 4-hour timestamp, you can see how the 4-hour went from being in this bullish trend to now being in a bearish trend, now allowing the daily time frame to form that retracement. So as price broke out of this 4-hour structure, having the continuation towards the downside, I wanted to see price one start to form that retracement. So as soon as price started to form this retracement, I then dropped towards the 1-hour time frame. On this 1-hour time frame, the only thing I want to see is I want to see the 4-hour and the 1-hour in sync. What do I mean? Well, looking at it on the 4-hour, once again, you can see how we had this recent breaker structure. Once price broke out, price started to form this retracement. As price started to form this retracement, I dropped towards the 1-hour time frame. On the 1-hour time frame, you can see how this retracement is in sync with the 4-hour structure being in a bearish trend. My 1-hour is also in a bearish trend, and we're also now having a retest of this recent structure break price shown me. One, we treated this minor area of interest as resistance, and support, and again resistance, showing more than 2 rejections towards this area of interest. So once price tapped back into, this is when I dropped down towards the 5-minute time frame, and I waited for that shifter structure within the market. The first shifter structure did occur around here. Well, if I can get my tool, it did occur around here. I can zoom in and I can show you. So you can obviously see how the 5-minute time frame is in this bullish structure. As we're trending in this bullish structure, you can then see how price formed the continuation towards the upside breakout due to it breaking out of these recent higher highs. Price then had the switcher structure once more, showing me another breaker structure towards the downside around here. But as soon as this was established, we were middle of the day. I think it was like 3 o'clock, almost 4 o'clock in the afternoon. We are not in a time session to trade, so we simply walked away. So what I did was I just simply allowed the 1-hour time frame to form another retracement back towards this structure point, my area of interest where we shown rejection. As you can see, price did have that formation back towards the upside. It had a little pump, but not enough. But we were in the vicinity of this area. Let me go back. So the only thing I did was I waited for price to work its way back up towards my area of interest, and then after price worked its way back up towards my area of interest, I wanted to be in the time session to trade. Around this time, as you can see, it was 6 in the morning, almost New York session. I'm up pre New York session. I'm in my trade based off of my breaker structure. Again, you can see the 5-minute go from this bullish to then bearish flip due to the breakout once more. And then, like I talked about, we're not at my area of interest, but we are in the vicinity and we are close enough. So I am okay with that. And as long as price is showing me the flip from bullish to bearish, getting in sync with the higher time frame, such as the 1 hour being in a bearish trend and as well as the 4 hour being in a bearish trend, we were good to go. This is when I found my entry with this beautiful bearish engulfing candle you can see around here, performing the breakout, engulfing past that previous bullish candle, and I put my stops at the high of those 5-minute structure. This is my last recent high point that presented me with a breakout. I put my stops just above. And then my targets, I'm only targeting my 1 hour structure being here. So originally I was looking at a minimum of a 1 to 2 risk reward, well, around there, about here. I was looking at a 1 to 2 risk reward. But as soon as I saw price break through this area of interest, I decided to hold for 1 more hour, and I'm happy I did, because then we was able to squeeze out a 3.35% in return due to the flow of the market heading back down towards structure. Again, this is a simple way of how to look for a counter trend setup. You simply identify the trend on a 4-hour time frame. If you are in a bearish trend and you are looking for the retracement play on the daily time frame, you simply wait for the 4-hour to give you the breaker structure. Once price starts to form that retracement, you drop down towards the 1-hour time frame. Make sure that the 1 hour and the 4-hour are in sync. When you obviously can tell that the 4-hour has performed this breaker structure, look at the 1-hour time frame to see if it performed the breaker structure as well. If it did, then allow the 4-hour to start to form that retracement. Once it forms the retracement, you need a zone where to enter a trade. This is where you go back towards the 1-hour time frame, and the only thing you want to do is again draw out structure, but this time, as you're drawing out structure, you want to identify the last structure break. So obviously you can see how we went from this bullish to now bearish trend. As we flip from bullish to bearish, you can see how price established the breakout or the continuation breakout of our recent lower lows. So you can obviously see we have the overall structure bearish, and now you can see we have what? Structure within structure. The last structure break is around here. So if we drag this back towards our market, you can obviously see where that matches up there. We want to use that last previous structure point as an area of interest. After you're able to do that, you then go towards the 5-minute time frame after you tap back into your recent area of interest. Once price taps into, make sure you're in your time session to trade, and then you simply wait for the shift of structure from the bullish to bearish flip. Once you have that, wait for that entry, which will perform the break of structure, aka the bearish engulfing signal. Therefore, I put my stops above, and then my targets are just my 1-hour structure lows. This is our last example, AUD CAD. Obviously, I have it marked off that I'm not in this trade. This is a mimic trade. This is a good setup. I'm about to show you why, so let's break it down. So on the daily time frame, you can see clear as day price being in this strong bearish trend. So as price is in this bearish trend, you can see now price has formed this huge retracement to where the recent break of structure, right? The zone that was recently used as support, now wanted to see it get used as resistance. But as price formed this retracement, price had the break of structure above this area of interest. And once this is established, typically, since the daily has to have the break and the retest, the 4-hour typically goes from bullish to bearish, just depending on whatever situation you're in, to allow the daily time frame to have that retest. As price breaks above, we know that, hey, that means probably the 4-hour is still in this bullish trend, and we can possibly catch a counter trend move. So what we want to do is simply wait for price to form the retracement back down. If we can maintain above this area, again, treat it as support like we did before in the past. And then you can also see when price did break below it, treated it as resistance, right? So if price is above, I want to see it get treated as support and continue this ride back towards the upside. So in this case, the only thing we want to see is price get back above this area of interest that's found on the daily time frame. And once price get back above this daily area of interest, we want to see if the 4-hour and the 1-hour are in sync. So obviously we know the daily is bearish. But we know the 4-hour had to do what? It had to go from this bearish to bullish trend to allow the daily time frame form this huge retracement back towards the recent break of structure. So as price formed that retracement, you can see how price was still continuing in this uptrend market on the 4-hour time frame. And as price was continuing this 4-hour uptrend market, you can see where it performed the break of structure, continuing towards the upside, and then also breaking back above our daily area of interest. Zooming out and looking at it on the 4-hour timestamp, you can see how well price respects this area of interest. Below, treating it as resistance; above, treating it as support, right? So as soon as I saw price break above, this is when I went to the 1-hour to see if we were in sync. But on the 1-hour time frame, some people might call this, hey, this is the rejection of this area of interest, but I call it a break of structure. Why? Because we simply had the body candle close above my recent body candle. As soon as I see a body close above the recent structure point, this is a break of structure. It doesn't have to be in your eyes, but it is in my eyes, and I count this as a break of structure. So since I saw that, I knew price was out of sync, and I simply walked away. This is a good trade. This is a good opportunity, but since we are out of sync with the 1-hour and the 4-hour time frame, it is not an opportunity we want to take. Like I said, we want the 4-hour and we want the 1-hour to be in sync when we're looking for these counter trend opportunities. Being that we're not in sync, you can obviously see how this would have resulted in a loss. Yes, price did have the retracement back towards your 1-hour area of interest if you don't mark this off as being your break of structure, right? So say this isn't a break of structure in your eyes and you're drawing structure on a 1-hour. Well, on the 1-hour time frame, this would have been your high, this would have been the break of structure, as you can see, and we're looking for price to have the retracement where? Back towards this area of interest. As soon as price formed that retracement back towards this area of interest, I then did what? I dropped towards the 5-minute time frame to wait for the shift of structure. One, we already identified the 1-hour has had the retracement back towards its recent broken structure, which is good. Now I want to see the 5-minute time frame now get back above this zone and treat it as support, while also showing me the continuation breakout towards the upside. Being on the 5-minute time frame, you can see where price was trending bearish. Price was in this bearish trend. As price was in this bearish trend, you can see how we started to consolidate around this area. But as soon as I start to see this bullish momentum, I then saw a continuation breakout towards the upside, breaking past these recent higher highs. As soon as I saw that breakout, I found my entry, stops just below that recent structure point. Again, being here, this is the last recent structure point that performed the breakout around there. I put my stops just below. You can see we almost got triggered out the first time if you were to take this trade. And then your targets, like always, being your 1-hour highs. So your targets would have looked something like this, and then your entry would have looked something like that. So it was an amazing setup. You only lost because the 1-hour performed the break of structure here, again being out of sync with the 4-hour time frame. So it resulted in a loss. This isn't a bad trade. Price was above your zone. Price did respect this zone. It was just that the 1-hour was not in sync off rip. As you can see on the Euro GBP, this trade that we took in the past, you can see the 4-hour is in this bearish trend, and you can see the 1-hour is in this bearish trend. They're in sync. Same thing with CHF JPY. You can see the 4-hour in this bearish trend. You can see the 1-hour in this bearish trend being in sync. But as we go back to odd CAD, you can see the 4-hour being in this bullish trend, and you can see the 1-hour being in this bearish trend due to the breakout being here, aka not being in sync. I pray that you use this and use it to your advantage, because it definitely works. So if you do like it, put it to use. Let me know how it does, well, how you do with it, and let me know if you enjoy it. Besides that, I'm gone, and I'm going to catch y'all in the next one.